Welcome back to Core Conversations, a CoreLogic podcast. I am your host, Maiclaire Bolton Smith, and I'm the Senior Leader of Research and Content Strategy with CoreLogic. In this podcast, we'll have conversations with industry experts about key topics from housing affordability to the impacts of natural disasters on property. As we approach the end of the year, we want to take a look back at 2020 and how the COVID-19 pandemic has been a catalyst for change. 2020 has been a year unlike any other. The words uncertain times, unprecedented event, and challenging year have inundated nearly everything we've done this year. Uncertainty, unprecedented, challenging disruptors have been imposed upon our businesses and our clients. But these disruptions are paving the way for change. And today, we want to take some time to look at these transformations with the people that know them best. So for our conversation today, I welcome three CoreLogic executives: Scott Little, Executive Property Marketing Solutions; Pete Carroll, Executive Public Policy and Industry Relations; and Mikhail Palatnik, Executive Insurance Product Management. Scott and Mikhail, welcome, and Pete, welcome back to Core Conversations.
Thank you very much.
Yes, thanks for having us.
All right, so to get us started today, let's have each of you quickly introduce yourselves and tell our listeners a little bit about your background and your role here at CoreLogic. Scott, let's start with you.
Sure, thank you. I'm Scott Little. I actually lead the property marketing solutions area for CoreLogic. So to kind of simplify that down a little bit, it's we offer a range of properties that help a real estate agent or their brokerage not only market the listings that they have, but market themselves in the real estate industry. So do a lot around video and photography and print and brochures and items like that, just to help individuals market their properties and themselves in the real estate world.
That's great. Thanks, Scott. Pete, our listeners met you on episode 1 of this podcast, but can you give us a quick reminder on your background and your role here at CoreLogic?
Yeah, I'm happy to. Thanks for having me today, Maiclaire. My role at CoreLogic is public policy and industry relations. The core of what I do is work in Washington, D.C. to keep track of different legislative and regulatory policy initiatives underway, and how these initiatives affect not only the company, but also CoreLogic's clients, and how that influences or impacts the provisioning of our products and services for our clients. And I have a background in both fintech, as well as having been a regulator myself at the Consumer Financial Protection Bureau, where I worked on the housing finance mortgage regulations there.
That's great. Welcome back, Pete. And Mikhail, can you introduce yourself to our listeners?
Certainly, and good morning, guys. It's good to do this podcast with you today. So I'm responsible for the product management function for our insurance business here at CoreLogic. So effectively, that's spans the responsibility from sort of strategy setting down to implementation of the products that our clients consume in the insurance space. My background happens to be all of it as an overlap of sort of insurance and tech. And yeah.
Sounds good. All right. Well, so we all know that 2020 has been a year of major disruption. People often think of disruption in a negative context, but disruption can be the catalyst for change. So over the past 10 months, we've seen the property industry quickly adapt, grow, and thrive. The pandemic has offered an opportunity for businesses to embrace industry transformation, including an increased interest in automation, virtualization, and digitization. So in short, using more and more data and technology to guide how people find, buy, and protect the homes and businesses they love. So if we look at this past year, what exactly has changed? So Scott, let's start with you from the real estate perspective.
Thank you. It's interesting. Like everywhere else, a lot has changed in real estate over the last 10 months. A couple of items that I'll point out is that just due to the pandemic and people not out and about and moving around, we're seeing more and more people using kind of digital services to locate and shop for properties, do their home shopping. This has always been something that has happened, and I'm sure everybody's been on, different sites where they can search for properties, and then they look at the photos. And I think it was something people did more recreationally, but now with things shut down, what we're seeing is just more and more people actually um, going on the internet and using all these digital sites to actually look for properties and narrow it down to 2 or 3 properties they're really interested in, and the agent working with the potential home buyer to narrow it down before they actually go look for properties. And so I think, it was a trend that was well on its way, but I think that this pandemic has definitely um, sped that up, and it's more of now it's more the normal process to go online, look at some different homes and narrow down your search. Um, and with that, what's happening is you're seeing more and more agents and sellers start using different tools and more of these professional marketing tools, such as photography, such as 3D tours, virtual tours, really a way to make their home stand out from the rest of the crowd with the people searching on the internet. You really need to find a way to make your property pop, and so we're seeing a lot more of these services being used as just the normal now money that's spent to put a house on the market and get a lot of attention before it's sold. And then I think the last thing is a pretty natural and what would be obvious, and that is you're just seeing fewer and fewer open houses. Um, from a seller standpoint, you don't necessarily want multiple people coming through the house that you don't know where they've been. And then, from a buyer standpoint, the same thing, right? An open house, you don't get to dictate if there's 10 people there or one person there. And so it's just one of these items where I think everybody's trying to be as cautious as possible. And one thing that you can do is, you can avoid open houses. So you're just not seeing as many of those. It's a virtual open house now. It's a 3D walkthrough. And so, those are just a few of the items, but I think that on some of those items, you'll see that continue. And then on other ones, things may open back up. But for now, that's just kind of where things are and how we're seeing different products influence the real estate industry.
Yeah, that's really great, Scott, and so interesting, just this move to digital. As you're talking, I moved my own mind back to when we were buying our home, and we had to have gone to 100 open houses and being in so many houses, and just thinking of people finding ways to get their you can't have virtual cookies, and I remember that's what would get your attention when you go into an open house is somebody would have warm baked cookies, the smell of baking, and just to draw you in. So it's interesting the move to digital and how it's probably changing, not just changing things, but opening things up for a lot of people that may not have seen certain homes before. So with Pete, on the mortgage side of things, clearly seeing changes as well. What are we seeing? Is it that move to digital like we are with real estate?
Yes, absolutely. I would say many of the themes mirror those that Scott referenced, particularly with respect to home buyer preferences and also just the kind of preferences of what we call third-party service providers, people involved in the supply chain of creating a mortgage loan, which is really quite a complex supply chain. But at the end of the day, and this was certainly more true at the outset of the pandemic, but just kind of a pervasive feeling of, just with particularly with shelter-in-place orders, why persist with a face-to-face interaction with a stranger to do a particular process if it's not absolutely necessary to expose yourself to the virus. As time has gone on, and we've developed methods to, better ensure that people can reduce the risk of infecting others with masks and other tactics. That's fallen off a little bit, but generally speaking, I think it is, in a similar way, hastened what was already a process that was underway, which was digital transformation. And what's interesting about the mortgage industry is that digital transformation has been latent. In some ways, we're really kind of back in 1998, just getting started with things like web self-service portals that have only come online in recent years. And in some ways, we're really on the cutting edge with artificial intelligence, machine learning technologies. So it's a fascinating time for the mortgage industry. And it's digitization of the mortgage is happening at every stage of the process, including the marketing stage. We're seeing increased use of spatial technologies that allow mortgage lenders to look at various borrower data sets, demographic, as well as community related and property related analytics to truly understand how they can acquire new clients, new mortgage applicants, not only new business for purchase loans, but also how they can more effectively serve underserved clients, which is an important priority. In terms of application process, the technologies today around automation and decisioning allow lenders to instantly fit borrowers to the right product at the right price up front in the process, and kind of positioning the borrower up front to capture them as a client and engage them early. And digitizing what was previously a very time-intensive and laborious process of verifying the borrower's financial resources, their income and employment assets, and their debt information. This is all fundamental data about the borrower that goes into underwriting and approving them for a mortgage loan that used to be done with reams of paper, and now can be done entirely digitally in many cases.
Wow.
And then the underwriting process, we've had automation in underwriting since the 1990s. But we are seeing an evolution in these decisioning and workflow engines to try to figure out where we can start automating fulfillment and trying to create more efficiencies in the process. And also seeing kind of alternatives in the way we underwrite borrowers. So, what are ways we can use new data or new modeling techniques, AI and machine learning techniques, that expand credit availability, credit access to homeowners, particularly in underserved markets, but do it in a way that removes any risk of implicit bias in the system, so that it's a fair system that is providing equal access to credit for everybody. And then finally, I'd just refer to as an example of kind of the fulfillment process. When you go through the process of getting a mortgage, we're seeing the appraisal process. You don't only underwrite a borrower for their creditworthiness and their ability to repay. You also have to underwrite the property to make sure it's in sound condition, that has a certain value, and that it's marketable. And we're seeing increased use of modeling techniques, automated valuation models, to automate the process of doing this valuation, but while still creating hybrid processes where we engage the independent appraiser, who are still critical constituents in this process. You still need to get the judgment of an independent appraiser, but to the extent that we can create workflows and techniques that better automate the collection of data about properties and do that digitally, that just speeds up the process and makes it possible for independent appraisers to do more business and earn more revenue at a higher margin. And then finally, the closing process. And if anybody who's ever received a mortgage has probably gone to a title agent, settlement agent, sat at a table with a notary public with a big stack of papers and had to sign away on a bunch of papers that are difficult to read through. That's moving online, and it's doing it in a way that's just like, for example, the same way you would do a Zoom meeting. You would be able to go through the process of authenticating yourself and signing all the documents electronically and remotely. And what's good about that is it makes sure that the most important documents are the ones that are presented up front to the homeowner so that they can make sure that they are clear on the terms of their mortgage before they sign on the dotted line. So tremendous innovation that's creating tremendous efficiencies across the board.
Wow, yeah, no, that's so great, and I think everybody that's ever bought a home or refinanced their home is so familiar with that huge stack of papers that you have to sign, and this just is such a wonderful way forward in seeing the digital movement of all of this. So, with both finding and buying a home, we're seeing this move towards digital. So, Mikhail, what about protecting the home? Is the insurance industry seeing this same move to digital?
Yeah, I can totally relate to all the sort of parallels that my colleagues referred to in the real estate market and the mortgage market. It's in general, it's good to see our industries moving into 21st century aggressively. But the a lot of the foundation's been laid out in the last few years, especially with the emergence of insurtech, of insurance companies experimenting with sort of digital workflows, and for the sake of automation, straight through processing, but ultimately is to continue to improve consumer experience. And as all of us can relate to, anything has to do with real estate, that experience can continue to certainly improve. But everything's been accelerated with the push to sort of minimize human to human contact during COVID. So a lot of that experimentation, instead of maybe measuring a few more times, those workflows were pushed forward to continue down the vision of those optimized workflows. So I just maybe I'll run through a couple of examples of what sort of the future looks like for the insurance industry, but in general, it's starting to make huge strides towards that. So really, there's kind of three areas. The first area is really the interaction that consumers have with the insurance company when they're obtaining insurance. So the quoting, the process of quoting, obtaining a policy, inspection, etc. So a lot of work has gone into this sort of improved digital interaction. So if you think about it, like imagine yourself, even if I use some of Scott's examples, if you're doing a virtual walkthrough, let's say of a property, and you just, or if even a physical one, if you get to the open house and you just say, hey Siri, hey, I wonder what insurance costs on this property. And then instantly, all the information is gathered in the background and you're produced quotes and options. And those options are tailored specifically for you and your needs based on the information that the can be aggregated and collected about you and the risk without you having to fill out a whole lot of questionnaires that you probably don't know the answers to. Right. So ultimately, as you decide to purchase that property, you just effectively, from whatever workflow you're comfortable with, you can even send a text. You ultimately click one button and work through the coverage needs that you have that, again, are tailored towards you. And that's done. That's the extent of your shopping experience. Where right now, that's certainly not the case. A lot of, hefty questionnaires, very sort of obtrusive inspection processes, et cetera. So that's certainly moving forward. And then, the secondary interaction and the most painful that typically consumers have with the homeowner's insurance is when God forbid, there's a claim that needs to be filed, or you have some sort of a loss associated with your property. And that's, for those of you who've been through that process, it's certainly very painful. There's not many people know what to do. There's a lot of parties to be involved. So now the industry is effectively moving to the capabilities where consumers could be almost not involved in the process, a homeowner. So, think about this use case is that, an insurance company uses forecasting data integrated with their policies in force to figure out if there's a storm that's coming, that they use some sort of messaging capability to warn everyone to sort of hunker down, get their cars in the garages. And if, let's say it's a hailstorm, right after the storm, utilizing forensic data and damage assessment, you can figure out who most likely had a loss or had a problem. Literally utilize a lot of data to start your claim process behind the scenes without even have to wait for that phone call from the consumer, and literally, push out that job to particular contractors and an adjuster. Now, so effectively, just after one click of a button or a phone call, right away, someone's going to show up at your door with a, pallet full of shingles, saying, hey, I'm here to fix your problem. And that's ultimately where the insurance industry needs to go, and it is going, and it's possible. So many components of that are there, almost there, or that workflows are being drawn out. And then there's also associated with again, the groundwork's been laid out, but it's been accelerated as the move of insurance companies from risk avoidance to risk mitigation. Right, so there's a lot of insurance companies who are taking equity stakes and home protection devices, anywhere from water mitigation to, burglary alarm to, digital doorbells, and that's the sake of reducing the risk instead of eliminating or trying to not have that risk. And ultimately, if you think about it, again, sort of futuristic use case, but not that futuristic. Let's say if you're a small business, you literally, it's the same thing. You go on a website, you say, I need insurance. The particular agency or insurance company already knows everything they need to know about you because they've collected that data and they're able to draw on that information. So they provide a tailor-made policy to you. And then the next day, someone shows up at your front door with a box full of IoT devices. Say, I'm here to install those because I want to help you minimize any potential risk. That's tailored specifically to your business, to your exposure. And again, that's not science fiction anymore. That's a digital sort of progress that's occurring, and we're getting there.
Yeah, the Internet of Things, which at one point in time seemed to be the way of the future is now, and it really is. We're seeing it across so many different things. So when we look back now at it's been about 10 months since this pandemic hit the US, with all of these changes, what do you think will persist beyond the pandemic? Ultimately, fundamentally changing the way that our business is conducted. And do you have any ideas of which one of these things might not change? So let's go in the same order again. Scott, from a real estate finding perspective.
I think it's a very interesting question. I look at it from the standpoint just of efficiency.
Mm,
The changes that have occurred over the last 10 months to do things online, digitally, in all aspects of looking for a property, going through the process of buying a property, all of those things. If you look at it from the homeowner, the home seller perspective, from the real estate agent, and the buyer, it all points to more efficiency.
mhm.
You can do more. You can search for homes online. The real estate agent now can direct information to you without driving from house to house, having an open house at each stop. The seller, can prep the house, have a 3D tour of the house online for everybody to see. And then if somebody gets to the point of, nearing the decision to buy, yes, they can have the person come to the house, but it's not a full blown open house anymore.
Mhm.
It's here's a prospective buyer that has narrowed down his choices. And so, you know, I I only see this as a way of improving how real estate works fundamentally. And and then to your other point, what will persist? There's always going to be the need for a real estate agent, for those that really feel like this is one of the major investments of my lifetime, and I want the expert to walk me through the finer points.
Sure,
And
yeah.
so, items like that, will there still be open houses? Yes. People will look for their home online. They'll do the tour. At the end of the day, though, before they make that commitment, they're going to want to go see the property. They're going to want to walk it. They're going to make that final decision.
Mhm.
But that 80% of the work that happens from the point of time where I decide I want to buy a property, so much of that now can happen from a digital standpoint. And then there'll be some traditional aspects that will occur, related to the agent and having an open house, or having a visit to the house, and then moving on to the closing. And so, um, as difficult a time as this is, I think that in so many industries, it's forcing the industries to adjust, and those adjustments are leading to better efficiency in the long run. And so, that's what we're seeing in real estate. And so, I think, like any other set of hard times, there's usually some benefits that come from it, and I think that's going to be the case here.
Yeah, definitely. And I love the way that you phrased that there's always going to be challenges, but benefits can come from it. So are we seeing, Pete, same thing on the mortgage side of things when people are buying a home, the increased efficiency? Is that what's going to continue?
Oh, no question. I mean, digital transformation is absolutely here to stay. Now, the supply chain will remain the same. I mean, we'll always have to continue doing the same things we always do. We need to appraise the condition, value, and marketability of a home. We need to make sure there's clear title to the property for the homeowner to purchase the home. In some cases, mortgage insurance needs to be procured. So all the suppliers in the supply chain will still be critical stakeholders in this process. It'll just become digital, and it will become more efficient and more convenient for the prospective homeowner, which is a good thing. So I expect to see continued readiness towards the end-to-end digital process. And I think there's an important distinction to make between what I would call readiness versus adoption. There'll be a push towards adoption as well as readiness. Readiness is, as I mentioned before, in many ways we're playing catch up, trying to digitize a lot of processes that other industries have already digitized. But you have to be digital ready before you can have train your staff, your loan officers, and encourage your clients to use and adopt the technology. So we're in the midst of both of creating the readiness for the end-to-end digital mortgage while educating loan officers and even home buyers about the benefits of adopting that technology. And they are two different things. And finally, I would just say risk management is going to be a major focus. That as we continue to digitize and automate a lot of what were previously manual processes, we've got to make sure that we're constantly looking back and measuring and evaluating the efficacy of those automations. It's one thing to automate a process, but if it's not automated in a correct way, in a way that has integrity and accuracy, then it's not going to be necessarily prudent. So making sure that there's rigorous testing and evaluation of these procedures will be a very important focus as well.
Yeah, definitely an important thing to point out as well. So, Mikhail, then from insurance, is it the similar sort of story again?
Yeah, absolutely. And I think there's certainly going to be ebbs and flows, right? So as insurance companies are learning, uh, potential where the pitfalls of some of the straight through processing might be, where they need to shore up their process or the way that they do business will change. But I think the general direction will be going that way and pretty aggressively. And I think, even sort of COVID aside and even automation aside, at the end of the day, it's really driven by consumer expectation. People expect their insurance engagement interaction to be akin to what they have in other areas of their life. And frankly, you don't even need to look at uh, other real estate verticals or non-real estate. You can just look at even how far car insurance been able to come. And on the auto front, so for example, right now you go buy a car literally at the dealership. If you want to get insurance, you just need to provide your VIN number. Someone scans it and give you a license, and that's it. That's all you need to do. That's the end of it. And then if you get in a sort of fender bender, um, at this point, it's the workflow for a lot of insurance companies is that you come out the car, take some pictures with the insurance app, and Uber shows up, and that's the extent of your engagement. And the insurance company already uses that imagery to estimate the damage, to get ultimately gets your car into the garage, cuts the check, and the car is fixed. So it's this sort of tailored, optimized experience for consumers to ultimately do the job, which is insurance companies are hired to do, which is to provide the protection in case something happens. And I think those expectations won't change. And I think the way that the consumers are experiencing their lives everywhere else will spur their demand for how they experience the world of insurance. So I think it's here to stay. It will just a lot of learning to be done. So maybe there's going to be sort of starts and stops, and people figure out how to tweak. But it's moving into that direction pretty fast.
Great, thank you. So continued on with this digital transformation. I love that concept of making property as easy as auto. So thank you for that analogy, Mikhail. So if we look at, if just to wrap up now, just quickly, surviving COVID looks to be a long haul activity, even with the potential of a vaccine on the horizon, which we're now seeing in the news. What are the implications for these change? Do we have any concerns about them, or is it all positive? Scott?
I, I feel like the concerns are related to COVID. I think going forward, what we gain in what's changed, what people have developed, what people have learned, I think that a majority, when it's all said and done, will end up being positives for moving forward. Um, People are learning a lot of ways to do things differently. One example we have in that we're seeing in real estate is people were forced to go back to working from home, and that was a nice option for a long time for in certain industries if it worked. And then all of a sudden, we saw a case where everybody needed to work from home because you couldn't gather together. And so, from that, now what we see is a movement of people out to the suburbs because there's a realization in some of the industries that we don't need to pay rent in a downtown location and spend all this money when we're doing just as well with people working remotely. And then that allows those individuals to move out, get more space, a place for their family. They don't have to worry about the commute. And so, like any dramatic, troublesome time, there's a lot of changes. Um, Most of the negatives are short term, and in the longer term, there's a lot of positives. And I see the use of more digital tools on the internet in real estate as a long term positive, and I think it's here to stay.
That's great to hear. So, Pete, from your perspective, you did mention risk management just a few minutes ago. What do you think? All positive, or are there concerns?
I mean, no, I think it's all positive. I mean, just with the caveat that, you have to, test and evaluate and measure and confirm automation and digitization. I think by and large, I'm just personally a big believer in technology innovation and its ability to create transparency and efficiency and auditability in transactions. And I just think that's always going to be a more reliable process when done correctly. And there's tremendous benefits if you're a home buyer, just the ability to, do your parts of the process on a 24/7 by 365 self-service basis. That's been true of many industries for a long time, and it's becoming true of the mortgage industry now. And especially in a process where there's many steps and stages, it's not like you just get on a website, type stuff in, and you're done. You have to go through a variety of interactions with a mortgage lender, and to be able to do that in a more flexible way, I think is a positive thing. And just in terms of being able to improve home buyer education, just having the tools for home buyers to be able to know which product is right for them and which monthly payment and interest rate is right for them, and how that mortgage product is going to behave over time. Will the interest rate adjust? How much cash do they need to close? These are important considerations for the biggest purchase of their lives. So having the tools to be able to navigate, these different combinations and permutations in a way that's simple and understandable is a really big benefit when done properly. There's tremendous business benefits, of course, right? Improved profit margins, just when things move faster, that reduces costs. It creates what we call more liquidity in the mortgage industry. When things are just moving kind of more consistently and efficiently in a standard way, it just kind of improves the top line for mortgage lenders as well, or gain on sale margin. And it reduces operational risks. Incidents of error and fraud just go down tremendously when you've got standardized processes that are moving, in an efficient way. The one thing I would say is I think that as we move towards automation, I think the one risk I would point to is what I referred to before as implicit bias, right? As we get more flexible, as technology innovation enables us to do fancy things like connect up different data sets and think more creatively about ways we can responsibly expand the credit box. On the one hand, that creates the opportunity to provide access to credit to low to moderate income persons that are disproportionately persons of color in our society, and that's a benefit. But on the other hand, there's a real risk that these models can inadvertently embed what we call implicit bias, which is just subconscious or implicit assumptions that end up having outcomes that are unexpected or unintended, but nonetheless still have the potential to create uneven outcomes for persons of color. And we just, back to the point of rigorous test and evaluation to make sure that when we put these innovations in place, that we're getting all the benefits out of them and leaving all of the unintended consequences and downsides behind.
Yeah, no, definitely, for sure. And Mikhail, all positive from an insurance perspective, or any concerns?
No, well, no concerns, but I think collectively we need to continue to sort of learn how to do things a little bit differently, right? And this is spurring, an insurance industry historically has been a risk-averse industry, as by definition, if you will. But we need to continue to learn to do things a little bit differently in order to progress down that digital journey. So, for example, you need to learn how to work with new data sources that potentially are incomplete or partial, just to continue to optimize the workflow. It's to continue to figure out how to plug and play with different vendors, right? So you need to find ways and find solutions that will work for your specific needs, and it might be 2-3 different vendors that will need to be stitched together in order to do the trick. And it can't be decade-long contract negotiations and IT implementation. The investment into consumer experience at every level, that's going to continue to happen. Consumers are expecting to potentially start their insurance process in a phone call and continue it in a text and get email back, and all those interactions have to be ubiquitously optimal and satisfying for consumers. So and ultimately insurance companies and vendors in the space will need to continue to figure out how to partner better in order to provide those experiences. So there's a lot of metamorphosis of evolution that's going to need to continue to occur in this industry for it to get to where it wants to go.
That's great. Thank you, Mikhail. And thank you all for joining me today on Core Conversations, a CoreLogic podcast. It's been so great to have all three of you here today to offer your perspectives.
Thank you very much.
Yes, thank you. Had a great time. Thanks, Maiclaire.
Thank you, Maiclaire, for hosting us. And gentlemen, it's good talking to you.
So great. So for more information and insights on the property market and the housing economy, please visit us at corelogic.com/insights. I hope you've enjoyed our latest episode, taking a look back at 2020 and how the disruptive pandemic has been a catalyst for change and really provided a bright outlook for the future of our industries. As we close out on 2020, I want to take a moment to highlight the team that makes this podcast possible. I'm just the voice of Core Conversations, but it wouldn't happen without our producer, Ria Tarakia, editor and sound engineer, Romia Roman, and social media guru, Mike Wojcik. Thank you for listening. Please remember to leave us a review and let us know your thoughts, and subscribe wherever you get your podcasts to be notified when new episodes are released. Tune in next time for another Core Conversation.